Okay, guys, understanding market structure and how to analyze using market structure, you have to know these key aspects. One is identifying the trend. This is by recognizing if market is making series of higher high and higher lows. Second is you have to recognize the support and resistance. Support and resistance is just by identifying key level where buyers or sellers react actively. Don't worry, I'll explain more with the diagram. So next one is recognizing the swing high and swing lows. This is by knowing the peaks and value of price action, which are often used to identify potential trend, reversal, or continuation. Now, let's use a diagram to explain more about this. If you watch closely, when it comes to market structure, we have two forms. We have trending market and we have ranging market. Now, for trending market, we have bullish market and we have bearish market, or you can also call it a buying market or a selling market, just like as we denoted here. This is a buying market. Why is it a buying market? Price has been making series of higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. For you to be able to confirm that okay, this is a bullish market or this is a buying market, your previous low must be able to take out the previous high that creates the low, creating or forming another new high. That is number one criteria. Your previous low must be able to take out the previous high that formed the low, creating another new high to the upside. That is for a bullish market or for a buying market. Then for a bearish market or a selling market, we have series of lower high, lower low, lower high, lower low, lower high, lower low. Then remember, the lower high must be able to take out the lower low for we to say that this market is bearish. The lower high must be able to take out the lower low. So when it comes to trending market, these are the two forms we use in identifying if a market is trending. Is either it's trending to the upside or it's trending to the downside. Is either it's buying or it's selling. Then we now have ranging market. When we say ranging market is when price has, like, we won't say it's stagnant, but it's not making any move, it's not trending at a particular point. It's only making series of uh no, it's only going to the support, coming back to the resistance, going to the support, coming back to the previous resistance, going to the support, repeating same thing on and on again. Like, it's not creating a new high, it's not creating a new low. That is when we call, or we say, the market is ranging. When price is not creating a new high, like, look at this one. This one was supposed to create, when it come back, it was supposed to create a new high, which it failed. It was supposed to create a new high here. It was supposed to create a new high, but it failed. It it bounced back to the resistance. Using that resistance point, it was able to take it back to its previous support. From that support, it went back to the resistance, but unable to break through that resistance and still come back to the support. It keeps repeating this, repeating this. That is to tell you that market is not ready to trend. Market is not ready to trend. Price keeps repeating the same pattern on and on again. Like, it keeps maintaining that zone. When you see price doing this, we tend to call it a ranging market. And we have a way of trading this. There are different strategy we use in trading these forms of market structures. when the market is trending, there's a strategy we use in trading it. When it's ranging, there's a strategy we use in trading it. But what I want you guys to know is that, put this, in fact, if you can practice this and remember that, before, if it's a bullish market or if market is trending to the upside, or for you to say a market is buying, the previous higher low must be able to take out the previous higher high, just like this, breaking structure to it and giving us a new high, just like this. This was the previous high. Okay, this is the previous higher low that created a new higher high. Then the higher high formed in a new higher low, which we are expecting. For we to say that this market is bullish or is moving to the upside, it has to break the previous higher high, giving us another new high. Same thing to the selling market or the bearish market. The lower low must be able to take out, sorry, the lower high must be able to take out the lower low. If the lower high is unable to take out the lower low, then something is wrong. It's either the market is trying to change trend to a bullish trend, or it's trying to take liquidity. I don't want to like start going into liquidity, because the topic of today is just market structure. So what I want you guys to understand is, for any market to trend, is either is selling or is buying. And if a market is to buy, it has to create series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. This is supposed to be higher low. Then if it's selling, lower high, lower low, lower high, lower low, just like that. Then when the market is ranging, you have to identify it by looking out for the previous point price went to. The previous point price went to, and when it's coming back, was it able to break through that point? Was it able to break through that point? If no, then you have to watch out for the next zone to know if price will get there and bounce back to the previous zone is coming from. If this happen, then you have to do what? Mark out your support and resistance, knowing that the market is just ranging. And when market is ranging, we have a strategy we use in trading it, but it's not advisable for traders to take trade within this period, because sometimes you make series of loss. Reason is that you like um there won't be proper risk to reward. There won't be proper risk to reward. Though when you get to the advanced level, you understand there's a way we use in trading this ranging market, but it's not advisable to trade a ranging market as a trader. So let's go to the real chart and explain what we just said just now. So looking at the real charts, these are candlesticks. These are candlesticks. These are candlesticks. So now, if you look closely, I'm on a bullish trade. So thank God is really going well. It's really going well. So now, if you look closely, you will notice that this market has been trending to the upside. Gold, SAUSD, has been bullish for a very long time. Why do we say it's bullish? The market structure here has been creating series of higher high, higher low, higher high, higher low. In fact, let me use this too. It has been creating series of higher high, higher low, higher high, high, higher low, higher high, higher low, higher high, another higher low, which was here. Which was here. Then when it gets there, it creates a lower, sorry, higher low, creating another higher high. So with just knowing the market structure, you can see there's nothing else I use in taking this trade. This particular one you see running in my favor. There's nothing else. It's just market structure. Market structure. But it will get to a stage I'm going to still teach you guys how to properly take the best higher high and higher low, then the best lower low and lower high. Because if you notice, as a beginner trader with what I just taught, you will when when price was here, you will expect price when price was unable to take out this previous high. Some traders might think that okay, price might not go higher more. Reason is that the lower high, sorry, the higher low was unable to take out the higher high, the previous higher high. So they might think that okay, this market has changed direction, but no, there is another way we're using knowing this. On the north, we are supposed to take this as a transition from bullish to bearish. Why? This low was unable to take out this high here. It was unable to take out this high here. But why did I take this trade? So if you want to know why I took this trade and how you can also spot out such opportunity, then watch out for my next video. I'll be explaining how you can use liquidity, market structure, and other points or confluences to get a very good trade like this. If you can look clearly, we're already running about 100 and something pips, I think. 100 and something pips in profits. This will be about 150 pips in profit. 150 pips in profit. That is crazy. That is crazy. So if you want to know how I took this trade, what was the strategy behind it, then watch out for my next video, and never forget to like and follow us to get such educative videos. This is just like this is just the basic of market structure. In our next video, we'll be going deeper in telling you how you can spot the best entry point using market structure and other confluences. So for now, bye guys. See you in the next video.